Really just taking a look at the setup of the market heading into August. If you look at the chart year to date, it's been a lot of progress, I think, in July as well. But you've had this sort of stop-start feeling to the overall market this year since that big correction, January, February. So we nosed above that 2,800 level in the S&P 500. That orange line is the all-time high at 2,872. So you're only within 2% of that all-time high, but you've had this pattern of kind of making some progress and then flattening out. So it's not necessarily been a high momentum market, but it has obviously been, we're up 5% year to date. A lot of people, maybe it doesn't feel like that in terms of the S&P 500. So here are some of the issues going in. We have valuation and sentiment have, I think, moderated enough to where you're okay. You're at about a 5-year average in terms of your forward PE for the S&P 500. The 2-year uptrend, if you go back to kind of Brexit time and even before that, February of 2016, it's intact. It's kind of defended this kind of long-term uptrend. I would say that momentum and leadership have kind of become a little ragged in the market. Obviously, we saw the big FANG stocks fall apart a little bit, and then financials haven't participated. So you started to see some defensive tone there. The question is it just kind of sector rotation, or is it something bigger? And then the seasonal issue, right? Everyone's going to be talking about August has been a weak month for the market, September even weaker, and August even more recently has been kind of a trouble spot. 3 years ago, it was an important top. I don't think that seasonal stuff really dictates where the market goes, but it shows you a tendency, a kind of a little bit of an overlay that suggests what we're dealing with. You mentioned valuation being at around a 5-year average right now. Where were we in January, the end of January? 18.5 forward earnings, 18.5 times for the S&P 500. We're down below 16.5 right now. So like I said, 5-year average, which in itself is not challenging. The question is, are we dealing with a situation where in 2019 that growth rate of earnings is really going to be questionable?